Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein of Linden Associates, and here we are just after 3:30 p.m. Central Daylight Time with your financial market review for this Wednesday. And we are now on the 23rd of August, 2017. All right, I was on Fox TV. That's why I had to change my shirts and all. Did my little thing. If I won $700 million in tonight's lottery, what would I do? And I made it pretty clear. I said, if you win that kind of money, you know, forget the taxes. You got to take all that out. Of course, some states have state tax, some don't. You're already rich, real rich. All you function should do is to not trade to make more money. It's to keep the money that you have and live off the dividends and the interest income it can generate, taking the smallest amount of risk you can, but also not being foolish and realizing inflation's there and you've got to blend with it. So that was the point. We all had fun with it today, and that was cool. As we look at the dollar index, you can see it's still under the selling pressure, and that is because as we go into the Jackson Hole event that begins tomorrow and ends on the 26th, we're going to hear central bankers, and of course the two central bankers everybody's going to be geared on are our central banker, Janet Yellen, and Mario Draghi of the European Central Bank. What are the policies going to be? Are they going to let the cat out of the bag, or are they just going to do as they probably should? Say nothing and just talk about what-if events and monetary policies, not necessarily for their country. That's what I'm expecting. I am not expecting this to be a big event. And as such, I think it gives you the bent, if you will, of the market thinking that, okay, European Central Bank still looking to cut its stimulus, and the U.S., as much as we talk about raising interest rates, we don't have the inflation scenario, and we got an economy, not economy, but economic data that's sort of like this. We get a good piece here, a bad piece there. It's not all terrible. The OEC today came out with an important statement. It said that for the first time in this decade, all 45 countries that they track are in a growth mode. That's very, very important. And over the past 4 or 5 decades, it only happens about once a decade. Now, it did happen a couple of years in a row just prior to the 1973 event of the OPEC where they shut off the oil. But prior to that, I'm telling you, it's about once every now and then. Now, it'd be interesting to see what happens and how fast it comes out of that. And they mention that. They say there can always be shocks to an economy, but there's growth everywhere. So while the stock markets act like they want to back off, the question is how much can they back off in that type of environment? We're seeing today that the bonds and the notes are rallying again, giving back yield one more time. The gold market rallying off the break in the dollar. So let's see where that puts us. When we take a look at the NASDAQ, you can see that the market's gone recently from 56.5275 to a close of 59.3850, and today the market's around 58.43. So it's broken about 100 points. It can break more than that, but it's broken 100 points or so far. When we take a look at a chart, I say it's in a down thrust as the market has gone from 59.3775. These are closes on a daily chart, not the weeklies, to 57.94. We've bounced up roughly 50 points, and we're sort of hanging there. When you look at the bar chart, I can see here that a market that is making attempts at waves to the downside, with each high not as high as a previous high. And you see that very clear on the swing line that I created. And swing line's a study I developed, believe me, 20 some odd years ago for my son, who's a broker with me, so that he could look at a chart and say to himself, oh, that market's in an uptrend, downtrend, or no trend, and tell me what the risk is if he were to come into the market. An example, if you're in a downtrend with lower highs, lower lows, the risk is to not take out 59.4950. So if you're at 58.44, you know the risk is from 58.44 and a quarter to 59.4950, round figures 105 points. What is that per point? And you know the dollar risk to break that pattern. Barring that, the trend is down. If you filter that the way that I teach in my charting course, you know that the 18-day average is something I call the line in the sand. And the market rallied back up to it yesterday, today, and that is the number it's having a problem with. When we look at Bollinger Bands, which are these black bands, what you get in them is a market that is, if you will, telling you where theoretical support and resistance is. You know that the slope of the band is slightly downward. You can see that. Should the market get down to the band, I'd expect support, and if it gives ground, the 100-day average could offer more support. Compound this the other way. If we have the resistance point here and you get through it, the bears have to defend it to keep the bear trend in place by not allowing it to get to 59.49.50. If that were taken out, possibly you go to the upper Bollinger Band. But who's controlling the market without anything else on the chart right now? The bears are. Momentum, flat is the slow stochastic is going. It often points up or down. And if you notice, when it's pointing up, market's moving up. One of the theories of momentum is it foreruns price. Well, right now what it's doing is it's saying you're spinning your wheels. Reminds me of that song. Remember when we all grew up? Spinning wheels, gotta go round and all that. That seems to be what we're doing right now, but with a bit of a downside bend to it. As we take a look at the S&P, it's not different. The market's got lower highs, lower lows, tried to get up to the 18-day average, couldn't quite get there. Support back between 24.21 and 24.15.75. But again, the trend is down, the bias is down, momentum is pretty flat. When we get to the Dow Jones, the market went right up today. You look at today's high, 21,900. Look at the 18-day average of closes. You went right to it, ran into your wall, and backed off. Now, if the market tomorrow doesn't take out today's high, the swing line will then have lower highs. It's already got lower lows. It will turn down, and the potential is that the market might go back to the lower Bollinger Band. Let's assume the market goes up instead and gets over today's highs. Well, you'll still have then a pattern of a higher high and a lower low, which is no trend at all, and certainly momentum that's flat so far. In the Russell, this has been the most bearish of the stock indices. It today lost its embedded reading. That often is a sign that price is going to lead what? Nothing. Momentum's going to lead price up. Momentum is turned up as the market is lower. Remember what I told you, momentum tries to turn ahead of price. Now, the only time you can re-embed is when? The day after it loses it. So it lost it today. I'm moving it back here. You can see both numbers were under 20 yesterday. That's not the case. You either break hard tomorrow to make that happen, or the odds favor price and that 18-day average coming together. That's my theory. Doesn't mean it's going to work, but it's my theory. In the VIX, you fell right down yesterday to the 18 and the 100-day averages after getting to the upper Bollinger Band, and you found the home. The market's looking to see what to do next. The volatility is sort of flat right now. In TLT, the trend is up. You have an embedded reading. The market's next objective, the upper Bollinger Band. You lose the uptrend in the swing line if you take out 126.27. Barring that, going higher, bias is up as well. When you go to the bonds, how many days do you now have of prices over 80? Well, you certainly have both numbers today over 80. Yesterday, both over 80, and the day before. It's called an embedded reading. If the red line closes back under 80, then I look for price action to return to the 18-day average. Barring that, everything's still pointing to the upside. Resistance points known. The upper Bollinger Band at 156.22 hasn't been hit just yet. 10-year note, not the same. Overbought, not embedded. Trend, higher lows, higher highs. This is an outside day up. You should not take that low out in the next two trading sessions. If you do, I will call that a trap for the bulls. The problem is, what's the reward? If you take that out, I'm only looking for wherever the 18-day average comes in at that point. In the dollar index, the market has again failed, up, down against the 18-day average, but it's keeping its downtrend at this point, lower highs, lower lows. Now, yesterday's low in the market we didn't take out. That number was 92.98. Today's low 93.04, but you're going to settle under the 18-day average. Momentum is pointing down. The trend is down. Everything's pointing to a lower market. Maybe you can get to the lower Bollinger Band of 92.60, but it's one of the targets. In the euro currency, let's flip this all around. Higher lows, higher highs. Now, I moved that arrow here, but if you don't take out yesterday's high, it's really not quite there, 118.41 to 118.39. So this arrow would still be back here, but you still have the higher lows, higher highs. I was just ahead of myself when I was prepping this as I was getting it ready to do this show for you. Momentum pointing up, price over the 18-day average, trend up, market still pointing to 118.92, almost the 119 level. Aussie dollar, you have a market that I don't like necessarily. Higher lows, that's pretty clear. The pattern had been higher highs, but I think you'd agree with me if I'm looking at this right. This high right there of 79.48 is lower than 79.60. So even though the existing pattern you go by as higher lows, higher highs, the most recent event is a stall where the market's got lower highs, higher lows. Not something I like to see. Hanging near the 18-day average, a confusing chart would be my definition. Japanese yen in an uptrend. You have higher lows. Yes, this low is higher than that one. Higher highs. You fell back to that line in the sand again, that 18-day average. You held it. If you can continue up, there's your resistance point. But you are in overbought territory, which is always dangerous. Now, there's no trend in the crude oil. Crude oil seems to have just gone flat finally. You have a pattern with a higher high, lower low. Even now that you're moving that up, I don't see a trend. There's nothing here to do with it. I'm going to leave it alone. I see the resistance pretty well known at 48.50 to 48.75. Market's looking for direction. Gasoline, outside day up today, gives you a pattern of higher lows, higher highs over the 18-day average, puts the whole trend up with momentum going up. Until today's low is taken out, for whatever reason, the market came alive and reestablished an uptrend. Nat gas in a corrective mode in an uptrend. You have the higher lows, higher highs, weren't strong enough to get up on this rally to, again, that upper Bollinger Band. And I pointed that out to you yesterday saying, you know, each of these rallies seems to fail in this market without able to get up there, being able to get up there. That is not strength. This is a market that there's something wrong in. And while the trend is up, and it'll probably find support at the 288.40 area, if you take out 286.70, you lose that uptrend. You don't start a downtrend. You just have no trend again. So that's what I'd be a little nervous about. Let's talk about something that I've wanted to present to you for a while, the Linen Company research. Now, let me explain what we do to help you out. Our research covers a number of markets, and we cover each market with a staff here that writes on them. So we have our own, let's say our own research staffs, writing staffs. I mean, we're known for the research. We're a boutique firm. We're not trying to be the lowest discounter. We're not trying to be the most expensive firm on the street. We're a boutique. The old-fashioned firms of the 70s, 80s, and 90s where you pick up a phone, you talk to your customers. Yes, you can place orders electronically, but people want to talk. They don't want to find that when you call up, you can't find out any information. Hey, what about a report? When's it coming out? We give you all this. We want you to see what our clients get, because firm upon firm that we've seen over the years has gotten away from giving you research. It was all a race to who can give you the cheapest rate on the street. Go on, find your own research. And that's wonderful until you realize the research you're getting, you need real commodity research, you're not getting it. You've got grain reports. You're going to have the Jackson Hole. People are going to write about it. Over the weekend, don't you want to get your fill of commodity news? Our staff writes on the weekend. So by Sunday night, you're getting information you need. And no, we won't keep you on this list very long if you don't trade through us. But if you'd like to see what we offer, it's in all those categories, and we let you choose which ones you want. Call my staff. You can go to our website, www.iraepstein.com. You'll see a carousel above us. Click on that, any of the forms there that you'll see, and you can choose the information. Or underneath us on many websites says, click here for Ira's free information. Do so, and away you go.